When you look at the activity in the M&A market for the financial services industry, contrary to a lot of public opinion that in fact there's not a lot going on, in fact there has been a lot going on. There's been a need over the past several years for a lot of the very large banks to redeploy their assets in a different way. That's resulted for some to make acquisitions, but for others to do divestitures. So when you look at the very big banks, there have been a fair number of divestitures, keeping this particular industry fairly active over the last several years, despite the fact that the economy's been weak and the sector as a whole has been relatively weak. When you look at M&A activity for the financial services industry, you have to really look on it as incorporating a number of different activities. It's not just acquisitions, it's not just mergers, it also includes joint ventures, strategic alliances, and of course divestitures, where in fact a bank is looking to be able to reposition itself in a smaller way than where it had before, or to get out of something which it doesn't consider to be non-core at this point, or perhaps even because of pressure from shareholders, activists and shareholders who have been very aggressive back in the US, more aggressive recently over here. So M&A activity is increasing because of some of those other activities other than just the traditional merger or acquisition. Where's this going to be leading? Where do I see this heading? Very clearly, we're going to be continuing to see more on the joint venture side for banks who are just putting their toe in the water to try to see whether in fact something might be useful, especially with startup companies, companies that are non-traditionally in the banking industry. Not necessarily yet getting positioned in order to be able to acquire them, but perhaps maybe making a minority investment if it's a startup company to see where it goes before they then jump in with 2 feet.